Investors and traders, welcome to the channel Market Chart Pattern. Today is 4th of May 2025. Hope everyone is having a fantastic weekend. We'll take a look at the key US markets, which will be the stock market mainly, and we'll take a look at the nasdaq, the S&P 500, and time permitting, briefly Dow Jones as well, and then we'll try to take a look at some of the sectors as well. And before we actually begin, we'll take a look at our timing model and some of our international indices as well. As always, this video is for educational purposes only, and it is not a financial advice. So what we are looking at is the daily chart of Dow Jones Industrial, and we have got our timing model on it, and we have a minor timing coming in on the 8th of May, and then we have 27th to 28th of May as an important timing, and 2nd of September is key timing. So just reminding everyone, especially new subscribers, with regards to the key timings that we are watching. So here is a report which is being generated out of my system, and it's just a quick one to take a look at the daily returns of the different indices that we are following. So we can clearly see last Friday when the market closed, the German DAX was clearly the winner, and it was up close to 2.62% up, and then the French CAC 40 2.33%, and then so clearly the European markets, these two main indices, with the exception of FTSE 100, which I'll come to, they are really performing quite well as of last Friday. Hang Seng Stock Exchange Index was not too far away, and then nasdaq 100 1.6% is what the return. S&P 500 followed by 1.47%, and Dow Jones Industrial has been one of the US key indices which performed the least, but still closed at 1.39% in the positive. And the FTSE 100, although it had a fantastic streak over the course of past week, it was lagging still, but still 1.17% is a pretty good performance. Nikkei, which has been one of the indices in the major economies that we are following here, which has been one of the weakest one, also returned about 1%. And look at the VXN, which is the volatility index for nasdaq. It was down 7%, and nearly 8% is WIX. So clearly the volatility is, especially on last Friday, it kind of collapsed, and we have seen nice positive returns. Now just because the month had just started, this is just a picture of the month-to-date returns, but the month has just barely started, and here I'm presenting another report from the system, and in this what we see is basically the system picks top 10 stocks which are actually outperforming the S&P 500 by giving positive returns. So the basic idea behind this is to find those stocks which are stronger than the market. And the market, we are looking at one of the broader indices, into S&P 500, which has got about 500 stocks in it. So these are the stocks which actually outperformed the S&P 500. They were stronger than the broader market, so they do deserve a look. And if some of these stocks, such as the Palantir, if these keep on hitting these lists, on daily basis and on weekly basis as well, then these are the kind of stocks one should be looking at if one is looking to go long, for example. Again, that totally depends upon your research, but this is something which is really helpful. And what we have seen, the Dexcom, which is DXCM, had a really huge day. Maybe they had earnings out, I do not know. I think I'll do a separate video in which we take a look at some of these stocks. United Airlines did quite well as well, up 7.1%. This is the Ben, which is the Franklin Resources Asset Management Custody Banks, up 7.04%. Palantir, this is making the list quite a lot. It was up by 6.95%. So really interesting breakdown right here, and the S&P was up only 1.47% in comparison to some of these stocks which are stronger than the market itself. And if we take a look at on weekly returns basis, which is week to date, we see some of the names which are actually quite interesting. For example, we have this Carrier Global come in, which is in the sector of building products. On the I think it had a really nice earnings perhaps come out, and it jumped 19.1%, really massively beating the S&P 500 broader indices. We have the ANET, which is the Arista Networks. We have the Trend Technologies, is again in the building products, so you can see the sectors which are kind of getting the attention these days. And the Dexcom is healthcare equipment. Howmet Aerospace, and then Microsoft, one of the big sevens. Is quite rare to see these hitting this list these days, but with the recent earnings out last week, we are beginning to see some of the names hit these. So Microsoft is being one of them, and then Meta on a daily return basis also hit this list a few days ago. So if you're interested in getting these end of day reports, these get generated out of my system every working day. So you can actually reach out to me on the email in the description, and I'll just add you to the distribution list. It's just free of charge, and if you want to unsubscribe, just email, and I'll just take you off the list. Okay, so now let's take a look at some of the indices. So we'll start by taking a look at the Sensex, which is the Bombay Stock Exchange Index, basically the Indian market, one of the big caps names out there. And here, what we had been actually watching for is that this market actually started a bear move back in September of 2024, and then it completed a really nice pattern which we had identified right here, and we were looking for a nice rally to start, which it did, and it was more of a bear move because you can see it did a double top formation, a little above the 38.2% retracement. Boom, it just moved back. Now it had a really nice strong move to the upside right into this resistance level of 61.8% retracement, and also the 1.27 expansion coming from these swing high. So it's actually got right into resistance level. So let's see how it's going to trade on next Monday. If it trades lower, it's able to take out the lows of, let's say, 30th of April, then the chances are it's actually a pullback is starting in this market. Let's start by taking a look at also the HSI, which is the Hang Seng Index Future. So Hang Seng hit a very strong resistance level. But look at the confluence of ratios and patterns that came together, and it had a pretty big move to the downside, which also ended on the on the 9th of April. But look at this 7th of April. This is when a majority of the US indices kind of formed also a bottom, rallying right into 61.8% retracement, also 50%. So it's also getting into the resistance zone right here as well. DAX, German DAX. Let's take a look at this index of 40 stocks. And what do we see? We see a market which has just vertically gone up. If you think about a V-shaped recovery, this is a fantastic example of that. I mean, it's just like a rocket ship if you look at it. We were getting bearish around here because we had this ABCD pattern completed, and we had this kind of a diamond pattern formation right here. And then once it broke below this this kind of trend line support, boom, it was just a massive move, really quick move to the downside, right into 38.2% retracement. And also what I had pointed out back then was that it was pretty good support, because what you see here, and let me actually pull it back like this, is actually equal to what had happened before. So that was the 21-22 bear market, and it just completed the exact same move in the magnitude. The only difference is just happened in a couple of weeks, so it's just really quick. And then what we have seen now is just like money is just pouring into this market. Look at this V-shaped recovery. Just come and fill this gap up as well, and the chances are it's gonna go and challenge these highs, make an all-time new high. Yeah, it's just I think just money is as things de-escalate or decelerate with regards to tariffs, the money is sort of moving back into the equities, and what we are looking at is a V-shaped recovery in this index. And now let's take a look at the FTSE 100. We talk about a V-shaped recovery in the German DAX. Look at this. Look at FTSE 100. It's just been bought up. Look at this. This is UK stocks. It looks like there is quite a lot of demand for this. Maybe it's some of the money being repatriated as well. But if you talk about a V-shaped recovery, this is what it looks like. It's getting right into this region, which is also a resistance level. So let's actually go back right here. It really touched the 78.6% retracement. I think this is something, a region where it is likely to find some resistance. Maybe we begin to see some sort of consolidation take place over the course of next couple of trading days. But if the move is really strong, it's got a chance to go challenge these highs, maybe get it and make a new all-time high as well. But look, this is the kind of V-shaped recovery. It looks like the investors are really buying up these equities, which they perhaps deem fairly undervalued with their whatever valuation models they are using in Europe and the United Kingdom. Okay. Now, let's do something which is a little bit different to normally what we do. So we're going to take a look at, because the start of the new month, although the month of May started last week, but we only have had 2 trading days. So let's start to take a look at some of the monthly charts. So we will take a look at the NQ, which is the NASDAQ 100 monthly chart. So this is a really long-term chart. It's not something which we take a look at often, typically around the month end, because we really need to get to see the confirmation after the month has ended. So we have to wait anywhere between 20 to 22 trading days to come back and take a look at a monthly chart. You can see that nice ABCD pattern. I really thought a market had a chance to get above to 23,000. Maybe once you'll do that to complete this ABCD, but this is right here, and we'll clearly see that on the shorter time frames, so the daily and the weekly, that the market began to start a consolidation into this, and then we have had a move, really sharp move lower. And then what is really interesting about this is that the market fell right into a zone of confluence. So 50% retracement from this CD leg of the CD leg. And if you look at the entire ABCD, this low is right at the 38.2% retracement. So this is not a coincidence. You can actually go and draw this retracement. So the market just retraced 38.2% retracement of this entire market move since COVID lows. And the other interesting thing is, if you look at the entire 2022-2021, which a bear move which started sometime in November of 2021 and finished in October 2022, this move is actually equal to that. The only difference is it just really happened in 1, 2, 3 weeks time. So really it was really vicious, intraday. If you're watching the price action, very strong moves. But again, look again like this on the month of April, finding support from exact key levels and closing really strongly. And then what we are looking at is the month of May, which has already taken the highs of the April highs. So this is really interesting. So quite a powerful move right here, right into the confluence zone. So pretty interesting and impressive move we have seen. The most impressive thing about this is that it just came right off the confluence of the Fibonacci retracement, or the 50% is not a Fibonacci retracement, but it also formed a confluence zone with the aspects over there. This is the weekly chart, and here you can see that these are the retracements. Once it broke below this trend line right here, really sharp move right into this zone. And let's actually go back and take a look at the daily chart. So this is the daily chart right here, and on the daily chart, what it had done is on the futures chart, it has actually done an ABCD, but the CD leg is extended, so I've not drawn it as an extended form. And we'll also be taking a look at this on the cash market, because it's really important to actually take a look at futures and cash. Here we go. So 1.272 times the AB leg right here. So ABCD, and we have the 61.8% retracement combined nearby as well. And then what we are now doing is actually an ABCD to the upside, and it looks like where the market closed last Friday was above the 61% retracement. Still got a chance to move up a little bit, maybe around 20,600, maybe even 21,000 as well. So between this zone is somewhere where we should be watching for this. Here we go. Boom. So this is where we'll be taking a look at this one. Okay, so now let's flip over to the NDX, which is going to be the nasdaq 100, but in the cash form. And this is something which we have been following it more closely. So actually, let me do it right like this. So this is the ABCD that we were watching right here. We had identified this key zone for support, and the market actually came right into this. We had a confluence of 61.8% retracement, 38.2% retracement, ABCD formation. We had a number of things come by. So sorry, let me actually move it back here, and here we go. So this is where we had the Fibonacci retracements come by. Going all the way to October 2022 lows for the 38.2%, and then the October 2023 lows for the 61.8% retracement, ABCD. This is the technical setup. So I'm not gonna bore you with this because we have discussed this in previous videos. And now watching for this zone where the market could go and head into. And then if we just take a look at this on the weekly chart, this is how we are following it on the nasdaq 100 cash market. Boom. And then of course the weekly chart. Here we go. On the weekly chart, so you can see there is something slightly different to the futures chart, because in the futures chart it went right into the 38.2% retracement, but it hasn't done that on the cash market. And also in the futures chart we had this move of the 2022 bear equal, and let's see if it is equal on the cash. Here we go. Just duplicate this, and yeah, so it would have been equal had the market been had the market hit the 38.2% retracement. So the cash market appears to be a little bit stronger, and sometimes that gives a basis trade, some sort of an arbitrage. This is why it's really important to take a look at both the futures market and also the cash market. The only problem I see is that when the rollover happens, sometimes there's a big jump to the upside or the downside where the contracts get adjusted, and it only smooths out after a few trading days of a couple of weeks, for example. So that's why sometimes this is why I think we should be looking at both the cash index and the futures, the price action in both. So S&P 500, let's take a look at this monthly chart. This is the futures, and what we can see is pushed back right into the 50% of the October 2022 lows, right here into it. It did not get right into the 38.2% retracement, which is from the COVID lows to the recent highs, but nasdaq 100 futures did that. Now let's take a look at this on the weekly chart, and here we can see we have a confluence level of 1.272 expansion from this low to this high come in, or which is this 1.272, and also the 50% retracement. We have seen a nice rally higher, and look, this whole move happened after it completed this big black ABCD. There were smaller ABCDs such as the red one as well. And then if we just move back to the here we go, the daily chart, and here what we have is basically the corrective move ended right into this ABCD, where the CD leg is almost 1.618 times the AB leg, and then we had the 61.8% retracement as well. So a confluence of a number of things coming together, and we have seen a pretty nice bottom come in on the 7th of April, and we had a key timing there as well. And this is a really important low of 21st of April, which is an internal low at key timing as well. And we are seeing the market rally. I think it's got a chance to go and test these highs right here, and it'll be interesting how the market will behave once it gets there, because we just have the 78.6% retracement hanging a little bit higher as well. So this entire region is resistance right here. So the market could actually rotate lower from here. That remains the possibility. All right, so now let's take a look, but a quick look on the Dow Jones Industrial. So this is the daily chart, and what I think is not going to go into the details of the pattern formations, but the market appears to be heading into this 42,500 level. It'll be really interesting how the market is going to behave. That now, Dow Jones is a price-weighted index. It is not a market cap index, which means that stocks like Goldman Sachs, which is like nearly a 600 bucks stock, if it is rallying, it's going to have an impact. It did a beautiful ABCD right into it, and it's rallying nicely. If we take a look at the JP Morgan, sorry, chose the wrong one. Here we go. Not as nice looking ABCD, but still an ABCD, and now it's going for the test of the point C. So these kind of stocks impact Dow Jones quite a bit. Now let's take a look at some of the sectors. I will not be able to do all these sectors, but let me actually try doing as much as I can. So let's start by taking a look at the real estate. So the real estate had been the one which had been hit quite a lot actually, but what I'm seeing is a ABCD formation right here. Here we go. Boom, and we have seen a nice rally. I think we have been following this on the weekly, so let me actually move over to the weekly. So there we go. Ever since it formed this pattern formation shaded region, it's just moved lower. Now the chances are I think we are probably still in this red ABCD, but it's also found nice support right here as well and started to rally. If it gets above this pattern, this line, I think of course then it can get into this region right here. So interesting things what is happening in the real estate ETF. And then if we take a look at the utilities, XLU, so XLU went right into this ABCD formation, had a nice move to the upside, and now it's dealing with some overhanging resistance right here. Then if we take a look at the XLP, which is the consumer staples, they are actually a range bound market. It completed this ABCD in the purple, then it's just gone nowhere. Still got a chance to hit 85.63. And then if we take a look at XLY, which is the consumer discretionary, I think this one is coming under a lot of stress, and here you can see that this trend line is kind of hanging in there. It completed this 1.27 expansion and just rolled over since then. Now it's just kind of hanging in there, trying to make an attempt to rally. I think it's still got a chance to actually rotate lower. This one, and then if we take a look at XLV, which is the healthcare, and in here what we're looking at is an ABCD right at the 78.6% retracement, range bound price action. Now it also did a head and shoulder formation. In my opinion, if it is if it just gets below these kind of regions, then I think that you have a lot of air right here. So it's just going more of a sideways price action is what we are seeing. XLB, which is the materials, here we go. Materials is, again, you can argue head and shoulders, but I don't see too much of a symmetry in here, but it does look like what we're looking at is a picture like this. It moves right into the 78.6% retracement and ABCD right here, and boom. So I would imagine it's going to be more of a sideways price action. XLC, which is the communications. So this one is one of the better ones, but it also had a nice pullback. Now it's testing the 20-week moving average, which is this blue one, more of a sideways price action. I think it's still got a chance to retrace to 38.2% retrace, but nonetheless it has held nice support. Then let's take a look at the XLE. which is the energy. So the surprising thing about the energy one is that the crude prices have been down quite a lot, but it's hanging in there rather nicely in comparison. And I think it's because of the gasoline prices, which have not moved a lot to the downside, especially at the pumps as well. This is what I've been reported to by some of my colleagues living in the United States. I myself live in United Kingdom, and on the pumps I haven't seen petrol prices, diesel prices come down quite a bit, but they're stable. They're not going massively crazy high as well. I haven't looked at the price of Brent, because here in the United Kingdom, in Europe, we have a Brent, which is traded actively and used here in this market. So this is what we are looking at in the key markets that we are following. I hope you liked the video, and if you did, then please smash the like button. And if you liked our technical analysis, how we look at the markets using the Fibonacci retracements, expansions, projections, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. And if you would like to support the channel, and then the donation link is in the description. It will just help me with some of the admin stuff, such as subscriptions for TradingView, etc., and also help me to focus to bring more research for you guys. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.